Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. Happy Monday to you. What an interesting weekend we had, and actually even more interesting open here. We got a little pump there before the dump. Man, pumps and dumps, it's just getting so old. But either way you look at it here, we're still range bound. That's kind of the general premise here. 95,000, 98,000, that's pretty much just what we're seeing. So we can presume that we're going to see the price come down and bounce off 95,000 with an aggressive candle wick or two to sweep any type of late longs or early longs rather, who have significantly larger leverage than the average person. So that's kind of what we're looking at there. It's pretty much par for the course. We've seen this ever since February 7th. So 10 days in a row of just nonstop chop. Again, it's wreaking havoc on a lot of altcoins. Most of them are starting to find their bottom, but again, it almost felt like they were going to take off on Friday, and of course, they all just dumped out of nowhere. So again, it's an interesting market, no matter how you look at it. And what we're going to do is kind of try to make sense of this by looking at some back-end data and obviously understanding some patterns here too. So if you're new to the channel, just ask you hit the like button, comment below. If you've been watching for a while, thanks again for always hitting that like button. Just try to make sure that's a habit for you every time we watch a video, just to kind of get this in front of more people, because unfortunately YouTube sweeps these videos under the rug just based on the simple fact that people aren't interacting enough, or more important, maybe not watching all the way through. People like to fast forward to the end to get the answer, but little do they know they're actually screwing themselves over, because all the answers are throughout the entire video. And how you become a better trader is to learn. You don't just get somebody to tell you the answers, right? Are you going to cheat on a test, or are you going to study and do the work? There's a difference there. Anyways, take a look here. Back-end liquidation data. Not much has changed here, honestly. We had this liquidation range before. It is starting to get a little bit more heavy on around the 93 to 94,000 range. So just know these are liquidation events that could occur if the price comes down to that level, and we're starting to see more leverage there. So people are taking more longs as the price goes down. Of course, people take more shorts as the price goes up. It's just a kind of natural ebbs and flows, but the key takeaway here is we're close to the price action down below. 94 to 95,000 seems like a very practical place to be swept here shortly. And then what do you know? The price will probably recover from there. Just again, based on the recent patterns and history we have, we're not past 95,000 and we're not going to pass 98,000. It's really just the general consensus. Again, 10 days of trading has shown us that. It'll eventually happen, but between now and then, you want to just kind of presume it's going to continue, right? So along at 95,000 seems practical at this point, just based on the way that the range-bound trading has been happening, okay? Having said that though, 94 to 93,000 is that closer approximate of liquidation there. So if we do see a candle wick down, that would probably be an area of interest. We take a look here at liquidation delta. We can see more people are shorting than taking longs. This is standard. As soon as enough people start shorting, they rip the price back up and destroy all the late shorts. Super common. Nothing really to see here. It's kind of normal stuff, right? We take a look at open interest. We can see there's a lot more open interest above us, but as per usual, every time we've seen this here, the price ends up reversing and coming back up. Okay, so again, for the most part, when you have open interest above you, it's kind of construed as a resistance, because people will have exit liquidity when they try to sell their position and get out of the underwater trades. That's kind of what could happen at 98,000 and what should happen at 96. But again, as per usual, we're below that. We can see open interest at 95,000 as well. So that's our last leg of support. But again, how much, look at how ridiculous this price action is, folks. How much more ugly can you get? 4 doji candles followed by a bullish engulfing, bearish engulfing, bullish engulfing, some nonsense, rising star, falling grave. This is trash. There's no other way around it. Until we break this range, there's no real good trading that can happen. And again, you can still do good trading with range bound, don't get me wrong, but once more, every time we test a range, the upper and lower range, the more likely we are to break it too. So we're getting to that critical point here where it's going to have to break soon. So anyways, see here. First of all, to recognize we got a lot of resistance above us, so I think we're more likely to go down than we are to go up, just based on the simple sense that we have more resistances above us, so just keep that in mind. And then of course, just the overall selling pressure seems to be just generally higher. We can see we're under 50 on the RSI, have been for some time. While money flow index is increasing, this is a false positive being a Monday. Please understand that, because we had a low volume weekend, right? So it's going to give you some indications that we're good to go, but truthfully, it's not really an indicator you can trust on a Monday. Same thing here as well with the MACD hasn't converged yet. Nothing to see here. So the truth is there's zero bullish signs on the daily time frame. Okay. The only thing we have that's going for us that's potentially bullish is just taking along at this local support at 95,000. That's literally the only bullish sign we can see, and again, it's based on past history here. 1, 2, 3, 4, 5, 6 times roughly we've seen a price bounce off that level. Again, the more often you test something, the more likely it is to break. But you could say the same about the top here too. 98,000, 1, 2, 3, 4, 5, 6, 7 times roughly we've tested 98,000. So again, 5, 7, whatever the case is, it continues to grow, and eventually the bottom or the top will pop. Okay, taking a look here. We're still bearish. We've been under 50 on the RSI for some time. Money flow index is low. Of course, that is generally not necessarily the best gauge because of volume. But once more, we are seeing much more selling pressure than buying pressure in the last 12 hours since the traditional markets have opened. We take a look at the hourly. Same thing as well. I'm pretty confident we're going to see some bearish divergence here, and there's pretty much no reason to take a long. Again, the funny thing is, every time I say there's no reason to take a long, it goes up. Okay. And again, I'm saying that because you need to recognize that what should be happening right now isn't happening. The market makers are just manipulating the hell out of the price, and it's a very tumultuous and difficult trading scenario, right? Every time you get confirmation, for example, when you take it, you get confirmation on a long, for example, on a Friday, right? You take a long, the price just dumps all weekend and continues to go down. Right? That's how we're seeing it. Every single time we get confirming factors to take a long or a short, the price turns around. So you could almost apply the opposite of what is logical and have it work out well for you. So until the range is broken, the best way and easiest way to describe how to trade Bitcoin right now is to buy 95,000 and to sell 98,000. That's really the easiest way to understand it for right now. Until that changes, that's what we're going to do. Okay. And again, as soon as we start doing that, it's going to change and it's going to dump probably. I wouldn't be surprised by that. But at this point here, it's very illogical to take a long at 95,000, but it seems like the most practical and obvious option here for us. Okay, so I hope that makes sense on how to describe that. Again, this is just kind of how things are working right now. And again, typical market makers, as soon as everybody starts to pick up on the patterns, they shift to momentum. Okay, so I would not be surprised if we see a dump past 95,000, but I'm almost willing to take a long at 95 to 94,000 for Bitcoin, just based on sheer support at 95,000 and just how ridiculous the market is. Let's see what happens. Anyways, I hope you comment below and let me know your thoughts on everything. Love to hear it. Do not forget to like the video. Oh, also don't forget this too. Part of my community members who are using Bitunix, if you haven't yet, phenomenal exchange, no KYC or VPN. Check them out. Link down below, but we got some nice deposit rewards this month. Really simple and easy benefit there. Just go ahead and qualify. It's really simple and easy. All right, folks. Hope you have a good rest of your day. We'll see you in the next one. Take care.